I want to show you exactly how I lost a significant chunk of my portfolio in less than 48 hours. It wasn't because the market crashed. It wasn't because of a recession. It was because I made the single most common mistake that beginner investors make. If you're watching this, you probably want to build wealth. You want financial freedom. But the path to wealth isn't just about picking winners. It is about avoiding the fatal mistakes that wipe you out. Today, I'm putting my ego aside to show you my failures, so you don't have to repeat it. Let's rewind a bit. This was back when I first started taking investing seriously. The market was hot. Everywhere I looked, Twitter, YouTube, Reddit people were talking about this one specific tech stock. Let's call it Tech Corp. I watched it go up 10% in a day. I did nothing. The next day, up another 15%. I started feeling that itch in my stomach. FOMO, fear of missing out. My brain started whispering, if you don't buy now, you're going to be poor forever. So I ignored my rules. I didn't check the PE ratio. I didn't look at their cash flow. I just saw the price going up, and I bought at the very top. I felt like a genius for about 6 hours. The next morning, the earnings report came out. It wasn't even bad news, it just wasn't perfect news. But because the stock was so overhyped, the price collapsed, down 20%. Then 30%. I panicked. I watched my hard-earned money evaporating. And here is where the mistake compounded. Instead of holding through the volatility, I sold. I locked in the loss, I bought high, and I sold low. The classic beginner's trap. So, what actually happened here? In the Future Finance Lab, we look at data, not emotions. My mistake wasn't buying a bad company. My mistake was confusing price with value. Price is what you pay. Value is what you get. When I bought that stock, I was paying a premium price for average value. I was gambling on hype. I was playing a game of greater fool theory, hoping someone else would be foolish enough to pay even more than I did. I learned that when a stock is vertically climbing, it's usually too late. Professional investors don't chase buses that have already left the station. They wait for the next one. I never want to feel that panic again. So now I never buy a stock unless it passes this 3-step filter. Do I understand the business? If I can't explain it to a 5-year-old, I don't buy it. Is the company profitable? I stop buying promises and start buying profits. Is it on sale? I wait for red days. I buy when others are fearful, not when they are greedy. Losing that money hurt, but it was the best tuition I ever paid. It taught me patience. If you've made a mistake like this, don't quit. Learn from it. The market is a device for transferring money from the impatient to the patient. Be the patient one. If you want to see the specific stocks I am buying right now, based on data, not hype, make sure you subscribe to the channel. Thanks for watching, and I'll see you in the next analysis.